Hello everyone, welcome to Rajeshwari's Commerce and Management Study Hub. I am Rajeshwari here. Let us discuss today the problem on departmental trading account from the institute book only. It is as per the new syllabus, illustration number 15. A firm has two departments, raw material and manufacturing. The finished goods are produced by the manufacturing department with raw material supplied by raw material department at selling price. Using the following information, prepare departmental trading and profit and loss account for the year ended on 31st March 2022. Opening stock, raw materials, manufacturing, two departments are there. So department expenses, purchases, sales are given here. Opening stock, purchase, sales, manufacturing, selling expenses, raw material transfer to manufacturing department. This we will call it as interdepartmental transfer. Now here raw material department transfer to manufacturing department. So for manufacturing department it is a purchase, for raw material department it is a sales. Here we will credit and here we are debiting the transfer. Okay. Closing stock. Cost of closing stock of the manufacturing department consists 25% of manufacturing expenses and 75% of raw material. So manufacturing expenses, manufacturing departmental closing stock value 25% ಮಾತ್ರ ಮ್ಯಾನುಫ್ಯಾಕ್ಚರಿಂಗ್ ಎಕ್ಸ್ಪೆನ್ಸಸ್ ಬರುತ್ತೆ. ರಿಮೈನಿಂಗ್ 75% ಏನಿದೆ ಆ ವ್ಯಾಲ್ಯೂ raw material based value ಆಗಿದೆ. In the proceedings year, raw material department earned gross profit at the rate of 10%. Salary of rupees 5,000 and insurance premium is 1,600 are allocated between two departments on the basis of sales ratio. Find out the net profit of the firm as a whole. So here we need to find out the net profit. And here salary, insurance are coming under the profit and loss account. Those are indirect expenses and even selling expenses also. But manufacturing expenses is a direct expenses that we are recording under the trading account. And here we need to find out the value of stock reserve on the closing stock. Right. So for that we will consider these percentage. Based on this percentage, we are calculating the value of the stock reserve. Now let us prepare the first trading and profit and loss account. So here we are preparing departmental trading and profit and loss account for the year ended 31st March 2024. So here first we need to debit the opening stock, right? To opening stock. Opening stock andre no remaining stock. The previous year or previous month closing stock will be considered as present year or current month opening stock that we are recording, that we are debiting, because that is the stock which are remaining in the storeroom. 1,20,000. Manufacturing is 20,000. Then after stock verifying, the remaining stock we come to know, then we will do purchase, right? Purchase. Purchases is 8 and 6,000. 8 lakh and 6,000. Then here we have a transfer. Interdepartmental transfer. The transfer is here for manufacturing department, it's a purchase received from raw material department. How much we have received? 1,20,000. So we have debited. Then manufacturing expenses we have two manufacturing expenses. Manufacturing expenses directly they are given only for the manufacturing department, that is 24,000. Now we will record all credits. See here, if you are conceptually clear, then you will never get any doubts. What is the rule for assets? whether it is tangible or intangible, we are applying the rule of real account. The real account says debit what comes in, credit what goes out. Here we are debiting the stock because what we have, and purchase, it is inside the business, purchases coming into the business, again transfer coming into the business, and this is our nominal account. Nominal account is debit all expenses and losses, credit all incomes and gains. We debited, that's it, right? Now here real account, sales, asset, for assets, credit what comes in, credit what goes out, right? By sales, by sales. What is the amount of sale? 8,80,000. If you have not watched my previous video on basics, journal entries, basic concepts, it is most important. Kindly watch those videos. By transfer, see here, for purchase be debited to the concerned department. Here for sale, it is sale for the raw material department. Transferred to manufacturing department. How much we have transferred? 1,20,000. Here debit and here it is credit. Okay. Then by closing stock. By closing stock. Closing stock is 80,000, 24,000. So we have recorded all the items related to the trading account, right? Now let us find out the GP. So by observing here, you can see here the credit exceeds the debit. So gross profit to gross profit carry down, right? What is the total? Let us find out the total now. 8,80,000, 1,20,000, 80,000. This total 10,80,000, and here 1,80,000, 24,000, 2,04,000, 2,04,000, right? Now 1,20,000 plus 8,00,000, 9,20,000 minus 10,80,000, 1,60,000 is the profit of department raw material, and 2,04,000 minus 20,000, 6,000, 1,20,000, 24,000. 34,000 is the profit of manufacturing department. 10,80,000 and 2,04,000. Here we have carry down. Now you need to brought down these two to find out the net profit. Profit and loss account we are transferring by gross profit brought down. Gross profit brought down 1,60,000 and 34,000. Okay, 1,60,000 and 34,000. Now, which are all the expenses and incomes we have? We have to salary. Salary we are distributing based on the ratio of sales. So what will be the ratio? If we take 88 is to 18, this you can simplify, or else you can take as it is also, or you can simplify also. Now if you simplify, it is 44 is to 9, that is 2 44s are 2 4s are 8, 2 4s are 8, 44, 2 9s are 18. 44 is to 9. You can take this ratio or this as it is. If you simplify, when numbers are less, the calculations will be easy. The amount of salary is 5,000. Now we are 5,000 into 44 is to 9. 5,000 into 44 divided by 53. 53 is 44 plus 9. Okay, 44 plus 9 is 53. Now 5,000 into 44 divided by 53. 4,151 we will take. 0.9 is there, we are rounded up. Then from this total you can minus or else you can calculate also. 5,000 into 9 divided by 53, 849. Okay. Yes. Now next is insurance. Again, to insurance also we are distributing based on the sales ratio. Amount of insurance is ratio is 44 is to 9 and amount is 1600. Okay, 1600 into 44 divided by 53 will get 1328. From this you can minus directly. 1600 minus 1328, 272 you are getting. 272. Then we have selling expenses. Two selling expenses. Selling expenses we are taking under the profit and loss account because trading is purely related to your production ಫ್ಯಾಕ್ಟ್ರಿಯಲ್ಲಿ ಬರೋದನ್ನೆಲ್ಲ ಟ್ರೇಡಿಂಗ್ ಅಲ್ಲಿ ತಗೋಬೇಕು. ಅದಾದ್ಮೇಲೆ ಫಿನಿಶ್ಡ್ ಪ್ರಾಡಕ್ಟ್ ಆಗಿ ರೆಡಿ ಆಗಿ ಸೇಲ್ಸ್ ಬರುತ್ತಲ್ಲ ಅದನ್ನೆಲ್ಲ ಪ್ರಾಫಿಟ್ ಅಂಡ್ ಲಾಸ್ ಅಕೌಂಟಿಗೆ ತಗೋಬೇಕು. ಸೆಲ್ಲಿಂಗ್ ಎಕ್ಸ್ಪೆನ್ಸಸ್ ಇಸ್ ಡೈರೆಕ್ಟ್ಲಿ ಗಿವನ್, ದಟ್ ಇಸ್ 1600 and 800. Right? Any other items? Salary, selling expenses, insurance. Now let us calculate the profit for the general profit and loss account. Here you need to write to general profit and loss account because this net profit we are transferring to general profit and loss account. That is department net profit transferred. Okay. Now let us 1,60,000 minus 4151 minus 1328 plus 1600. It is 1,52,921. Profit of raw material department. Now profit of manufacturing department is 34,000 minus 849 minus 272 minus 800. That is 32,079. Okay. The total we are writing 1,60,000, 34,000, 1,60,000, 34,000. Right. Now we need to prepare the general profit and loss account. General profit and loss account for the year ended 31st March 24 only we will take it. Okay. Why we are preparing general profit and loss account? When any expenses, the common expenses we are not able to allocate to the concerned department based on any proportion or any base apportionment of expenses, then those expenses we are showing under general profit and loss account. Okay, now first we will transfer the net profit by the department, by departmental department profit and loss account. Total of both the department you need to take down here. Raw material manufacturing. Raw material is 1,52,921 and manufacturing 32,079. Here you are showing stock reserve. How you are showing stock reserve? For the unrealized profit, whatever unsold stock is there, no, for that stock reserve you are creating. Let us do the working note. Unrealized profit in unsold stock. Unsold stock. So we are taking based on the profit rate on transferred goods. Transferred goods is equals to GP rate of raw materials department. Here we have sent goods, we have considered as a sale, but it is not the actually sale, it is the interdepartmental transfer, right? So for that, here we are calculating for the raw material department, because the raw material department only sent goods to manufacturing department. Now what is the gross profit of raw material department? 1,60,000 is the gross profit, right? Divided by sales. What is the sales of the raw material department? It is 8,80,000, and you need to consider the transferred goods also. So what that is also your sales plus transfer. Transfer is 1,20,000 into 100 into 100. Now here 8,80,000 plus 1,20,000, 8, 9, 10 lakh, right? So 1,60,000 divided by 10 lakh into 100. 1,60,000 divided by 10 lakh to 100. What is the percentage? 16%. Right. Now what is your value of good of manufacturing department? Manufacturing department closing stock is manufacturing department closing stock is 24,000, right? In this 24,000, what is the percentage? The question clearly said 75% of raw material manufacturing expenses and 75% of raw materials. So 25%, this 24,000 includes manufacturing expenses also and the closing stock also. Here we don't want expenses, we want purely the stock which are remaining. So that is 75% you need to take on this 24,000. So 24,000 means 75% andre into 75% is 18,000. 18,000. Right. Now unrealized profit. Now this 18,000 is purely the stock, closing stock, which is remaining and does not include any expenses. Okay. Now on this closing stock, we are calculating the unrealized profit. What is the percentage of unrealized profit? 16%. We want to we want to find out the profit percentage on the unrealized profit based on the GP. So GP, how we got? Based on the sales. So that is why GP divided by sales. And here GP we have taken for the raw materials department and sales also for the raw material department, because from the raw material department only we have transferred goods to the manufacturing department, and we are finding the value for the manufacturing department closing stock. And why we are finding this? Because the closing stock includes the expenses also, and purely the remaining closing stock we are calculating the unrealized profit. Now 18,000, on this 18,000 into 16%. 16% is the GP percentage. 18,000 into 16 percentage, that means 2,880. 2,880 is the unrealized profit. Right. Now, what is the value of manufacturing department including opening stock? Value of manufacturing department including value of manufacturing department included in opening stock. So opening stock of the manufacturing department is 20,000. And what is the percentage given? That is 75%. 75% on 20,000 is 20,000 into 75%, 15,000. Right. Now unrealized profit on unrealized profit on opening stock. In opening stock is 15,000 into, this is 10%. It is given in the question only. Why we have taken on closing stock? Because closing stock ಜೊತೆ ನಾವು ಟ್ರಾನ್ಸ್ಫರ್ ಮಾಡ್ಕೊಂಡಿರೋ ಮೆಟೀರಿಯಲ್ಸ್ ಆಡ್ ಆನ್ ಆಗಿತ್ತು, ಅದಕ್ಕೇನೆ ಪರ್ಸೆಂಟೇಜ್ ಚೇಂಜ್ ಆಯ್ತು. ಬಟ್ ಇಲ್ಲಿ purely whatever the stock is remained with the manufacturing department is there, that is why we are taking only the 10%, right, on the opening stock. That will come 1,500. So what is the net stock reserve? Net stock reserve is 2,880. That is closing stock unrealized profit minus opening stock unrealized profit. What is the difference we have here? 2,880 minus 1,500. 1,380. This stock reserve we are recording in debit side of the general profit and loss account to stock reserve. 1,380. Okay. Now to capital account, the profit we are transferring to the capital account. Net profit transferred. Net profit transferred. What is the total? 1,52,921 plus 32,79. That is 1,85,000 minus 1,380. 1,83,620. 1,85,000. 1,85,000. Right? I hope you all clear, understood. So kindly watch the video, and while watching the video, practice the problem. Only practice makes you perfect. Okay. So first we prepared trading account, and we have taken all the expenses related to the production expenses and incomes. Then it comes to the sales, whatever sales related income and expenses were there, that we have considered. Then we prepared general profit and loss account. So general profit and loss account is when the expenses we are not able to allocate to the concerned department based on the apportionment that we are recording under the general profit and loss account. So here we have recorded, right? And here we need to find out stock reserve, because there is a interdepartmental transfer. Is it clear? Yes. Thank you for watching. Have a great day.